Hello everyone, welcome back to CryptoCache. Thank you so much for joining me here. I hope you're having an amazing day. Happy Saturday to you and your family. Obviously, it's a bit of a red day today. Most likely because of the CPI data yesterday came up 0.3% higher than expected, and that has a lot to do with it. So that's likely the reason we're seeing a continuation here instead of a traditional green Saturday and or possibly even Sunday. So again, we're not there yet. We'll know more soon. This candlestick hasn't closed, but it certainly isn't looking as good as the last 4 weekends. All right, if you're new to this channel, I'm not a financial advisor. I love teaching people how to trade. I hope you can learn something here today. My goal is to help you become a better trader. I've always loved teaching people to become better, and this is a great way to do it. I'm completely self-sufficient myself. It's a very comfortable lifestyle, and I can tell you it's not for everyone. But hey, if you want to find out and become a better trader, CryptoCache.tech is a site, link in the description below. I help you become effectively better, teaching everything that I know. With my academy, I also have a signal group where I send out signals for every single trade that I take as well. So really awesome community. Thank you so much to all my current community members for just being amazing. We have over 200 active members at this point. It's a really cool experience. Thank you. Take a look here at Bitcoin. So, I mean, speak of the obvious, right? We're having a red day today, had a red Friday yesterday. As I mentioned yesterday, red Fridays are pretty consistent in the overall sense of things. We've seen, what, five out of the last 6 Fridays have been red. So, again, it's a pretty high statistic to see a red Friday. But what's interesting is we've seen 4 of the last 5 weekends be green, with today being that exception. So again, patterns have a tendency to repeating themselves, but they don't have to, right? But also bear in mind too, CPI data, inflation, the whole 9 yards, it's all disadvantageous for a positive increase in price, all right? That's essentially what's going on. So we'll go ahead and take a look at some of the standard stuff here. First of all, we're going to go ahead and bypass once more, just say the monthly and the weekly, because I've driven that home plenty of times here, because the bottom line is that we're in a descending pattern until we break down or break back up above the 50-day SMA and or just this descending pattern. We are going to probably continue to expect some downside. And that may very well happen for the next month or two. Okay. So it is speculated at this point to see September, October, November be likely green months, just based on the overall ways in which Bitcoin has performed the last 3.5 years, or 3.5 years ago. Roughly that 4-year cycle is coming to fruition, and we can see somewhere right in the range of 18 to 20,000 is a key level support based on the previous all-time high. That should be a strong support level moving forward if we come down that low, along with both moving averages at the 21 and 22,000 range. All right. That said, though, taking a look here at the daily, here's kind of what we're looking at here. First of all, RSI is tapering off. Makes perfect sense. It's going down with the price action. We've also got a MACD divergence on the daily. So this could very well be the beginning. I wouldn't say the beginning of the end, but there is a decent chance we could very well see the price action continue lower. Because technically today, right now, the price action is exactly at the lowest point in which we've seen a one-day candlestick close, 28,500. So if we lose that level, I don't think we're going to see a lot of upside from here. Now, again, I think there is a Fed meeting next week, if I'm not mistaken, next Wednesday. And, between now and then, we'll probably see a slow bleed and then perhaps a recovery at that point. Again, a lot of different factors involved, but that does tend to happen a lot. Going into the meetings, we see red days. And of course, once the meeting occurs, we see a green day. Okay, so that might be something to consider. All right. That's where we're at on the daily. The only thing else that's pretty obvious as well is that we're below all 3 moving averages, the most important averages in my opinion, the 20, the 50, and the 200, and obviously the 100 would be trending right here in this range as well if you were to use that yourself. So again, that's just kind of where we're at there on the daily. Honestly, it doesn't look good, not at all. I wouldn't say that you should buy the dip, but what you should do, of course, is add to your position if you have the opportunity of, just based on the simple fact that it's a lower price point. Even though, yes, we may come lower, we may not as well, right? This could literally be the bottom. We don't truly know that, but if you dollar cost average and add to your position as the price comes lower, that's ultimately the best way to go, because once it recovers, you're going to be happy you did that. All right? So friendly advice, dollar cost average into Bitcoin and or Ethereum right now, good call in the long-term big picture. Looking at the 4-hour, we're below all moving averages, of course. We know that. We spoke about that yesterday. RSI is touching 30 once more. It didn't touch 30 recently, but it tried. So roughly about, 20 hours ago, 24 hours ago, we saw 35 tested, and now it's closer to 30. So the closer we get to 30, the more likelihood we are to see the price recover. And what I mean by that is if you look at Bitcoin's history, for the most part, obviously there are exceptions like this here. Anytime you see RSI coming close to 30, the likelihood of a rally, you could say, it comes back up. Right? So again, no guarantees on that. You never want to buy into just say an RSI at 30 on whichever time frame. That's not really the recommended consideration, but it is something to also understand that usually when you're below 30 or over 70, there's going to be some kind of swift recovery in most cases. Once again, we've seen in the past it doesn't happen sometimes, but I would say majority of the time you can expect the price to kind of hold at 30 or bounce. Okay, so hypothetically 28,500, right in that range. I know we got a wick down to 28,300. That's essentially something we need to pay attention to and understand. And what's interesting about this too, and it's funny how this works out, but you can see we got this resistance level here based on Fibonacci at 30,500. Price comes down to test the support level, loses that support, comes down to the next key level support of 29,200 and kind of trends sideways. We lost that right down to the next Fibonacci retracement of 28,357. So it's following these tiers quite perfectly. And these are tiers, TIERS, not the tears that we are crying when we see our prices go down. I'm sorry to laugh at, that's just the way it goes. In this industry, you really got to have some levity and try to keep things light, because honestly, this is just total garbage sometimes when you think about what's actually happening. I mean, we are down so far from where we were at before, and it's just kind of something you get used to. So again, I apologize for laughing. I know it sucks and it hurts. But the better thing you can do for yourself is to have some kind of positivity in this market, because that's really what keeps you successful. Good positive mental attitude as well. PM, very good stuff there. Highly recommend you check out my videos if you haven't already, if you're a community member. Make sure you understand and look at what it means to be a better trader, and a lot of it comes down to just being able to focus and have good mental clarity, healthy body, healthy mind, and that whole 9 yards. I just try to reiterate that, because I think a lot of folks overlook that, and it's really not spoken about much, but it is relevant, and it helps me tremendously. So I can tell you that's a great sign. Furthermore, too, just to note, of course, we can go ahead and remove this trend line. That was not really a thing. Of course, it was a thing at one point, but we lost that trend line, right? So now we're down below that. We can expect that to be a resistance type of level. And another thing to also understand too is this trend line here, right here. It's concurrent with the 50-day simple moving average on the daily. That one is effectively telling us that the price action is stuck underneath that range. So until the price can somehow get back up above this, then we're not really having much of a leg to stand on. We won't be able to see that potential reversal. And what'll happen too is when that does occur, it'll start making higher lows first, and it'll probably work itself into another type of ascending pattern, and it'll continue to break out potentially to the upside. So again, when we retest that level, we'll be in pretty good shape, but for now, it just kind of is what it is. All right, take a look at the 1 hour. Let's go ahead and wrap things up before my dog starts making some noise. TD sequential telling us we're hitting a 7 and we recently hit a 9. So this is almost 2 9s in a row. So hypothetically the price goes down a couple more hours and we should be at the bottom. Okay, so at this point in time we can see that we have an exhaustive state, 9 followed by an upwards 9 and now a downward potential 9. So when you see those type of patterns happening, it really just implies that there's a lot of bearish sentiment, and the overall sense here is that majority of this volume is bearish. I do like the look of this green candle here though. If you see this guy, that's a good candle there, essentially a bullish engulfing candle telling us that, hey, the price is probably unwilling to go much lower, and with this extra amount of volume, you can tell that the bulls do not want the price to come down below 28,500. Okay, so there's a good strong chance just based on that sentiment alone we should see some recovery this weekend. I wouldn't say it's going to be very dramatic at all. It'll probably look something similar to this, where the price will slowly trend upwards to 29,000 and potentially break below, or basically reject off of that key level resistance established by the previous low. Okay, because the previous low right here, this guy right here, is going to probably work as a resistance right here if the price were to come up. Okay, so just be mindful that 29K could very well be a line in the sand, something that could essentially potentially slow us down. And obviously, last thing to look at too here as well, basically just telling you if you have any short positions open, you might want to consider leaving them open, because we got plenty of range of motion here. There's at least another 24 hours before the price action intersects with the lagging span, and that essentially would tell us that we want to close our short For now, leave your shorts on, right? Don't lose your shorts, whatever the case is. But be cautious and careful with taking a long position. It's easy to want to buy the dip, but there's no guarantees it's going to come up because heaven forbid you bought this dip, same scenario, right? So hold strong on your shorts. There's no reason for you to want to take a long position at this point. I'm not telling you you want to necessarily open a short position either, because we're testing a key level support, as well as the fact that we're overextended and exhausted on just not only just the 1 hour, but even the 4 hours, telling us that the RSI is bouncing off of 30 or potentially going to bounce off 30. We need a strong fundamental catalyst to cause the price action come much lower. Is CPI data, is that 0.3% enough? There's a good chance that that is exactly the reason why we're seeing this right now. Because in all reality, Bitcoin should have continued to progress upwards, but the negativity looming around that data, and then the release instantly down. Okay, so it'd be interesting to see what happens next week when we have that Fed meeting and things were to come to fruition. But for now, I would expect to see a likely red weekend. Tomorrow will be interesting. I'm excited to see when the market opens, at least in the Eastern Hemisphere. Usually around 5 p.m. Pacific Standard Time, you can see a massive amount of volume being reintroduced into the market. And we'll see at that point which direction is actually going to happen. Because for right now, keep this in mind, if our one-day candlestick closes below 28,500, we're going to be in pretty rough shape. Okay, so let me just go ahead and draw that out here. You can see, look at this here. We've got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. Almost 11 days. Very close to 11 days, including today, 12. We've seen the price action test 28,500. How much longer is that going to hold as a support? You keep kicking a door, it's going to eventually break. Maybe some metal doors might last longer, but for the matter here, I mean, it's getting weak. We're weakening. The bears keep pushing the price action down, and the bulls are eventually going to concede. That's essentially what happens. There's just a big old battle between the two. So a close today below 28,500 would be disadvantageous. I think that would probably signal the fact that we're going to probably see more downside. If we can get a bounce somehow this weekend and survive next week, even after the Fed rate meeting comes out, I think we'll be in better shape. Once again, easier to say than done right now, I know that, but generally speaking, I wouldn't expect a significant upside, even though it does look like it's overextended to the downside on the micro. The macro is telling us and screaming that it wants to come lower. Okay, so just bear that in mind. All right, so that's essentially everything I have for you here today. I hope you learned something, and if you did, comment below on all that good stuff. Greatly appreciate you watching, and thanks again to all my current community members and the new members that have been joining as well. It's really awesome to be able to get some new fresh blood there, if you will, where we all learn and grow together. We also have weekly discussions too. It's a really awesome experience. Oh, one last thing I forgot to mention in the beginning. I do offer discounts for military and third world countries, so be sure to check that out. And what I mean by that is just CryptoCache.tech as a website where you can register. Message me directly, and I'll go ahead and, of course, respond with that verification there, giving you that confirmation for that discount code. So again, thank you so much for your service, and of course, third world countries as well. I hope you have a great rest of your day. We'll look forward to seeing you next one. Take care.